Why AFFIRM is one of the worst stocks you could buy in the stock market. Now, I've been asked about AFFIRM a lot of times actually. The first one was around 5 months ago. So I did a video on why Bill Gates bought AFFIRM stock, and I determined from my analysis that AFFIRM was very overpriced. So I decided to short the stock. And then 3 months ago, I believe Jeremy from Financial Education bought the stock around $65 or $70. And I get asked about it again. So I highlighted the risks with AFFIRM. And now AFFIRM is under $30, it's around $25. And now I'm getting asked about it again, so I'm going to do another video on why I don't personally like AFFIRM stock. Now the stock itself has come down a lot, the valuation actually came down a lot. If you look at the price to sales, it went from 55 to 5. So it did come down a lot, but I still have a lot of issues with the stock on why I don't personally like it. Now, if you own AFFIRM and you're watching the video, I hope you really don't get mad, because normally whenever I buy a stock, I don't look for videos and content that tell me why I'm right. I try to look for content that tells me why I'm wrong, so I really know how can I lose money. Because there's a lot of videos on how amazing AFFIRM is, but very few videos on the bear case for AFFIRM. So it's good to look at both cases and to determine the investment opportunity. Okay, now AFFIRM reminds me of a stock called Beyond Meat. And I'm going to tell you why it reminds me of Beyond Meat. If you look at AFFIRM, you know, the revenue has been growing amazingly well, over 54% revenue growth, pretty much amazing. AFFIRM is scoring all those partnerships with Shopify, with Stripe, with Amazon, with all those partnerships, just like, you know, Beyond Meat was scoring partnerships with McDonald's, with KFC, I believe, and many other places, but neither AFFIRM or Beyond Meat are actually making money, and I didn't have a clear plan of how actually they're gonna get to profitability. Now, if we look at the financial statement of AFFIRM, or actually the latest 10Q, on the reports, and we look, for example, at their net loss. This is 2021 and this here is 2022. Okay, now you could see from 2021 to 2022 their net loss increased. Now normally whenever I look for an unprofitable company, I look for the company to become profitable, and I like to see a trend of the company losing less money over time. In case of AFFIRM, it's losing more money year over year, which is not good at all. Now some people actually, you know, point to this here, which is the quarter on quarter year over year, which is a big difference. They lost 287 million in this quarter last year. And this quarter, they only lost 54 million. Okay, now that's a pretty big improvement. But if you actually look why they lost so much less than before, it's mainly because of this here, of the other expenses or income, which was 172 million. So I'm not sure what this really was. Maybe they had some assets, they actually went up or went down in value, and this is how they got the 172 million. But this is not from the core business itself. Looking at the operating loss, quarter over quarter, it went up massively from 209 million to 226. Year over year, operating loss doubled for the company AFFIRM. So this is why I don't understand why would you buy a stock like AFFIRM. There's so amazing companies in the market, even unprofitable companies that have very high potential and came down a lot in valuation. And I don't understand why AFFIRM. And I don't see how AFFIRM can ever be profitable in the future. For one main reason, and this is the provision for credit losses. This is where I'm very critical of the stock. Provision for credit losses, it was 40 million last year. Now it's at 182 million. This is pretty huge, pretty amazing. Whenever they give those loans to people, you know, on AFFIRM, first, there's no late payment fee. So even if you're late on AFFIRM, there's no kind of incentive to force you to pay on time or anything. Why? Because there's no late payment fee. But it's not there's no late payment fee. They even give credit to people that have no score. No score. Over 8%, this is the latest one, 8% of all the loans they give are for people with no score, zero score. And they use some score called ITACS score. I don't know if that's, you know, a little bit rigged, not like a credit score, but you could see the trend. A year ago they had around 2% with no score. That went from 2% to 8%, and it's likely going much higher. And if you look at the under 90 score, it also went up. It was from 1% to 2%. So around 10% of their customers have little to no score whatsoever. Okay, now why is AFFIRM doing this? Why are they giving loan and money to people with no credit score? Why are they doing that? Because they want to meet their growth expectations. They want to keep growing revenue. So they're going very, very aggressive in this market, and they're giving people with no score a loan. And I don't have to tell you how this will end. It normally ends very badly. Look at their 96 plus score, which is normally their best score. It went from 77% to 57%. So they keep giving more money to people with lower score, and those people are likely not gonna be able to pay it back in the future, especially if you look at the macro environment we're in. I know many of you don't kind of look at the macro environment, but whenever you own a stock like AFFIRM, which is a lot dependent on consumer spending and on the ability to consumers to pay those loans back, you have to look at the macro environment. You just cannot really ignore it. If you look at the savings rate, it's the lowest since the 2008 financial crisis. And then you have inflation taking a big toll on those families. So yes, they're gonna borrow more from AFFIRM, but can they actually pay them back? Especially if we go into recession and the Fed cannot bail anybody out. Can they really pay AFFIRM back? To me, I don't know. I don't think so. So my question is to you, you have such amazing companies in the stock market. Some of them can actually grow 20, 30, 40%, like AFFIRM. They have, same price to sales, 5, 4, or 3. And their profitability is getting better. And they don't have such a flawed business model. Why would you buy AFFIRM? Like, this is just the questions that I can't basically understand. Now, if you look at the analyst estimate for AFFIRM, they are not expected to make any profit until 2024. And I think I agree with the analyst. And even in 2024, they're pretty much going to lose the same money. They're going to grow amazing in revenue from 870 million to 2.6 billion. That's a lot of revenue growth. But what good is revenue if you can't make a profit? And I don't really see how AFFIRM can make a profit. But now, as the valuation came down a lot from 55 price to sales to 5, I mean, I wouldn't be surprised if the stock trades at 2 price to sales or 3 price to sales. So now, yes, it's a much better buy than before, 100%. But now you have so many other deals in the market that personally, if I had to bet on an unprofitable company, I would not choose AFFIRM because I have a lot of options right now with everything being down in the market. And now you know the upside potential and the risks with the stock, and you could determine yourself if you actually want to buy AFFIRM or not. So this was my video on AFFIRM stock. I hope you enjoyed it. If you liked it, please press the like button and maybe consider subscribing. So I hope to see you in another video.